Hello and welcome back to our business tips. Michael Lapete from KD here. I'm going to talk to you about general index of financial information, the GIFI or the GIFI. People talk about a GIFI. What is it? Well, when you file a corporate income tax return, you have to include financial information. That would be on your financial statements. And that is what the GIFI or GIFI is, GIFI, General Index to Financial Information. And each different line item has a code. For example, cash or bank is 1001. So each line item on your balance sheet, your income statement, has a code that gets input into the tax return under that general index, and that's how it's coded. And this is how CRA reads it, right? If they need to see your financials, they'll ask for them. Very rarely does CRA ever ask for your financial statements because the information from the financial statements is usually put on the GIFI, right? The CRA requires the same level of detail whether you do a regular T2 corporate tax return or you do a short. It doesn't matter what type. You have to make sure you give them that information. And even if you don't use software and you want to do it by paper, they would still ask you for the GIFI. Even non-resident corporations that file still have to use the general index to financial information. This is all available online, but typically you're going to use software. Or your accountant's going to use software to report what they are, okay? And there is three main GIFI schedules. There's a number of them, but there's three. And one is the 100, the GIFI 100, and that is the balance sheet. The GIFI 125, which is the income statement. And then we have our 140/141, which is our retained earning information. And there's one other one, if you're a brand new corporation, you fill out the 101 for a new balance sheet as well, for an opening balance sheet. Now, if your corporation is inactive, right, but you still have a balance sheet, then you still have to report GIFI. But if there's nothing on the balance sheet and it's completely zero, then there probably won't be any GIFI because it's all zeros, except for your share capital. Because you bought shares to get in the company. Whether it's $1, $10, $100, that might be the only thing in a dormant corporation. But again, still using GIFI almost every time. If you're involved in exploration development that has yet generated significant sales and revenue, if you capitalize deferred expenditures, you still got to use the same form. It doesn't really matter what type of corporation you use, what you're doing, the GIFI is required. And the index is basically a list of codes for each account. Very simple. If you got any questions, we'd love to hear from you. Post in the comments below and we'll look forward to seeing you in the next video.